You are lying in bed at 11 p.m. on a Tuesday, the glow of your phone illuminating the dark room. You are scrolling through a feed full of 22-year-olds who claim they just turned $1,000 into $1 million by trading a crypto token named after a dog wearing a beanie. You swipe away, open your banking app, and stare at the scheduled transfer set for tomorrow. $500 moving from checking to your investment account. It feels painfully slow. It feels almost pathetic compared to the neon-lit lottery tickets everyone else seems to be cashing in. But here is the reality of the board we're playing on. Everyone is chasing the next chaotic crypto hit, sweating over 1-minute charts, while the real, untouchable empires, the guys who own the debt, the buildings, the system itself, are built on a mathematical pattern so agonizingly boring that 99% of people quit before the magic trick even starts. They want you distracted by the noise. But if you know how to leverage this exact boring math, you become bulletproof. Let me walk you through exactly what happens when you commit to that $500 a month. Because the way this machine scales is going to rewrite your entire understanding of money. Level 1, Year 1, the struggle of the invisible grind. It is the first week of January and you set up the automated transfer. $500 vanishes from your checking account and drops into a broad market index fund. It stings. That $500 is tangible. That is a car lease. That is a weekend trip you're not taking. That is a very nice dinner out every single Friday. You do this for 12 agonizing months. By December, you have sacrificed $6,000 of your hard-earned cash. You log into your brokerage account on a cold winter morning, expecting to feel like a financial genius. You look at the balance. $6,420. You made $420. You stare at that number and feel like an absolute clown. You literally gave up 12 months of instant gratification, 12 months of disposable income, to make the equivalent of a couple of days' pay. Meanwhile, your coworker won big on a sports bet and bought a new watch. The psychological weight right now is incredibly heavy. The temptation to hit sell, pull that $6,000 out, and just book a flight to somewhere warm is screaming at you. Welcome to the great filter. This is entirely by design. The system is testing your emotional baseline. It is aggressively trying to shake you out, whispering that this slow path is for suckers. This is where the masses break. They take the money, buy a depreciating asset, and reset the clock to zero. But you don't. You bite down and keep the machine running. Level 2, Year 5. The turning point of momentum. You are 60 months deep into this game. You have systematically parted ways with $30,000 of your own money. By now, the $500 leaving your account every month is just background noise. You don't even feel it anymore. Your lifestyle has naturally adapted to its absence. You open your app on a random Thursday afternoon while waiting for a coffee. You aren't expecting much, but then you actually look at the total. The balance isn't $30,000. It is pushing $42,000. 12 grand just materialized out of thin air. You didn't clock in for that money. You didn't reply to a single email for it. You didn't argue with a boss for it. Your capital put on a hard hat, went to work, hired its own little employees, and dragged $12,000 of pure profit back to your account. This is the exact moment the mental shift happens. You feel a strange, quiet smirk form on your face. You are no longer just saving, you are deploying capital. You realize that the $400 you made back in year 1 wasn't an insult. It was the seed. The gears of compound interest have finally caught onto the track. The momentum is shifting from your physical labor to your money's labor. Then you cross into deep waters. Level 3, Year 15. The explosion. This is where the math goes from boring to violently aggressive, and you start to see why the ultra-wealthy guard this secret so closely. You are sitting at a dinner party. You listen to your peers complaining about inflation, about their mortgage rates, about how they are drowning in upgraded lifestyle debt. The bigger house, the luxury SUV, the private schools. They look successful, but they are bleeding out. You nod politely, but inside, you possess a quiet, terrifying confidence. Over the last decade and a half, you have steadily deposited $90,000. But your account? It is sitting at over $230,000. Let that sink in. More than half of your total net worth in this account was generated by the absolute void. The market has literally handed you $140,000. And here is the real kicker. In this 15th year alone, your portfolio is generating more money in interest than the $6,000 you are contributing out of pocket. Your money is now working harder than you are. The interest is compounding on the interest. It is a runaway train. If you stopped contributing completely right now, the machine would just keep feeding itself, growing fatter and faster. You look around that dinner table and you realize you are no longer playing the same game as these people. They are playing for the appearance of wealth. You have built an invisible, unbreakable fortress. Level 4, Year 30, the generation-defining fortune. It is 9 in the morning on a Tuesday. Not a weekend. A random, unremarkable Tuesday. The sun is streaming through your kitchen window, illuminating the steam rising from a perfectly brewed cup of coffee. You take a sip and let the complete silence of the house wash over you. No alarms, no mandatory meetings. You are wearing comfortable clothes. Your phone is completely silent. You open your laptop, not to check a frantic message from a boss, not to answer an urgent client email, but just to glance at the dashboard of your life. Over the past 3 decades, you have faithfully, stubbornly, relentlessly fed the machine. $500 a month for 360 months. Your total out-of-pocket contribution over your entire adult life. $180,000. That is the price of a mid-tier luxury car and a minor kitchen remodel. But you look at the big, bold number at the top of the screen. $1.1 million. You blink, even though you have watched it grow every single step of the way. Over $900,000 of pure, unadulterated equity was generated by nothing but time and mathematical certainty. You are officially a millionaire. But not the fake, rented Lamborghini millionaire screaming on social media. You are a liquid, unencumbered, quiet millionaire. You think back to that night 30 years ago, lying in bed, feeling pathetic because you weren't buying digital dog coins. You realize those gamblers got wiped out decades ago. The friends who laughed at your boring strategy back in year 1? They are currently sitting in gridlocked traffic, sweating over their depleted retirement accounts, realizing they have to work until they are 75 because they chased shiny objects and blew their cash on lifestyle inflation. They are trapped inside the machine. You, however, have bought your way out of it. The psychological relief is intoxicating. You realize that your money is now generating over $100,000 a year in growth all by itself. Your capital is earning a 6-figure salary. It makes more money while you sleep than you did in your first decade of working. You possess the ultimate luxury, the absolute freedom of your own time. Level 5, the end game. The transition to absolute autonomy. You are not just wealthy now, you are the house. It is 2:30 on a Thursday afternoon, and you are sitting in a mahogany-paneled lawyer's office, signing a stack of thick, heavy papers. You are setting up a living trust, because this money is no longer just about your groceries or your vacations. It is about your bloodline. You are changing the financial DNA of your family forever. Your grandchildren will have their lives funded by the decisions you made on a random Tuesday 30 years ago. You instruct your wealth manager to implement the 4% rule. You will now withdraw roughly $45,000 every single year, completely passive, to fund your existence. And the most beautiful, almost terrifying part of this math? Even while paying you a full-time median salary to do absolutely nothing, the principal balance will likely continue to grow. The interest outpaces your withdrawals. You will die with more money than you have right now, and you will pass a multi-million-dollar fortress down to your kids. You have effectively built a money-printing factory that outlives its creator. You look out the window of that high-rise office, down at the tiny cars and the people rushing on the sidewalks below, carrying their briefcases, stressed about their next paycheck, fighting for scraps in a game you already beat. You feel a profound, quiet empathy, but also a ruthless validation. You understand the matrix now. You see the invisible strings. The world runs on capital, and because you refused to be distracted by the circus, you are now the one holding the strings. Which brings us right back to the beginning. To that dark room, the glow of your phone at 11 p.m., and the temptation to gamble your future on a fleeting, chaotic trend. The greatest trick the financial entertainment industry ever pulled was convincing you that getting rich was supposed to be exciting. They want you perpetually anxious, watching 1-minute charts, addicted to the dopamine of the casino. They want you constantly buying, selling, stressing, and paying transaction fees, because that is exactly how they get rich off of you. But true, unbreakable wealth is built in the shadows. It is built in the quiet, brutally boring, relentless execution of a simple mathematical law. It is the $500 that vanishes from your checking account on a Wednesday morning, year after year, decade after decade, while everyone else is looking the other way. You don't need a lucky break. You don't need insider information. You don't need to time the market. You just need the iron discipline to let the math do what it was always designed to do. The clock is ticking, the machine is waiting, and your next transfer is scheduled for tomorrow. The only question now is, are you going to let it run?